Well, the markets are oscillating between gains and losses, lacking direction as we see it, and that's probably the best way to explain what's happening on the street. Couple of counters are drawing attention on back of good earnings. The ones that have disappointed the street are generally facing some selling pressure as we see it. But there's one counter that is outperforming the broader market generally, and that is LTTS. I believe there is an announcement regarding an acquisition that the company has made. The management of LTTS will be talking to us shortly. Well, if I can just get the management on and we can start this conversation. Amit Chadha, MD and CEO of LTTS, joins us about to talk to us about this recent acquisition. Hi Amit, thanks for joining in. Amit, your stock's getting very excited. Is there some news you'd like to share with us? I believe that there's a big acquisition you made.
Thank you so much for having me here. So look, if you go back to ER&D and you look at the spend, etc., there's about $80 billion of global ER&D outsourcing that is happening today. Per reports, 45% of that, or upwards of 43%, comes from software product engineering and platform engineering. One. Second, this also comes from areas of fintech and retail. Now, if I stand back and look at LTTS, we've been doing, I would say, a good job in digital engineering around the hardware piece, the silicon design piece, the semiconductor piece, etc. But when it comes to software product development and platform and AI, we believe that we had a white space. So we looked around for acquisitions because we did want to get to it. We would have gotten to it organically if we wanted to in a little bit, but we were looking for an inorganic push. And so Intelliswift is about $100 million in revenues. They still are going through the current year. I think they'll end up slightly upwards of that. So about $100 million of revenue, about 1,500 people, 500 in the US and Costa Rica, and about 1,000 in India. They've got their clients. They work with 4 of the top 5 hyperscalers. And 80% of their revenues come from about their top 25 accounts, which have been fairly stable and been their customer for more than 5 years, right? Now, if I flip to the vertical side, 50% of the revenue comes from the high-tech space, but the remaining 50% actually comes from retail and fintech, as well as from the private equity channel, which all these three we were not there, and it allows us to be able to get into it. Net, this allows us, and they've got their own tools. They've got in AI as well as in digital engineering, data engineering, in software product development. They've got their own tools, accelerators, cloud navigation frameworks that find a lot of use with their customers. So if I look at it net, this is a growth move for us. And then number one. Number two is that we've always talked about getting to a 1.5 billion run rate by March 25. We believe we're going to get closer to this. B allows us to get to $2 billion faster in the medium term, and allows us finally to actually put us on a growth path ahead of competition and industry. So that's been the rationale and quick bit about the company.
So you could have done a tuck-in as well, but this kind of gives you capability plus revenue in order to reach targets as well, so to say.
Yes. So look, there are 2 or 3 things, right? We've done tuck-ins in the past. We bought OT, we bought Essentia, we bought Graphene. All those were tuck-in acquisitions. And they did move the needle slightly, right? But we have $1.2 billion now. So the SmartWorld acquisition that we had done and now this one are both 100 million revenue. And I believe that we need to make these sure-footed shall I say, bets to take us forward and give us scale. Because if I look at our ratings now, we are top 3 globally when it comes to pure play engineering. This moves the needle to be able to move us to that top 2, top 1 bracket faster.
Amit, while we've talked about why it was one single big deal, but are you happy with the pricing, or have you paid a little bit more than you'd have liked to for the capabilities that you've acquired?
So number one, let me restate. So when I say turnaround, I basically am looking to put everybody on a double-digit growth path, right? and integrating, bringing people together, bringing cultures together is what I meant when I talk about turning around, right? So that's number one. So let's be clear on that. Now, in terms of margins, because that's the the second part of the question that you asked me, you will have to give me till January. Because I am going through our own ramp up in margins. I'm reconfirming 16% levels in EBIT for LTTS in FY25. And give us till January, we will come back and plot a path out for you. Look, I believe in saying what I can deliver, commit what I can deliver, and then deliver what I just committed, right? So please allow me till January to be able to do that. But right now, I would say, I'm excited about what the future holds. I'd written to our clients right after we filed. I wrote to our clients, and I've already got about 25 emails back in my mailbox saying, "Right move, great way to go, come see us," etc. So I do believe this is fairly positive from a growth dimension, profitable growth dimension for the company.
Indeed, Amit, and I think the markets and your investors are as excited. Your stock trades with a 4% gain as we see it. But share with me the internals for this, right? Are they as strong as LTTS, or is it, would it be fair for us to assume that it's a weaker candidate as compared to yourself at this stage?
So their margins and their stack is closer to our high-tech margins, right? Like anybody would be. But they've made a lot of investments. See, in the last year, because we've been going through with this for quite a long time, talking to them, etc., they've made some significant investments that have to start paying. Like we made investments in the first half of our year. And that's what it is. And that's why I'm saying, give me till January to come back and paint a picture for you. But we are not doing anything rash. It's in line with company strategy, in line with company values, vision, and we continue to focus on organic growth. This is an inorganic piece being brought in, but we will bolt on organic. In fact, our goal is to double Intelliswift revenues in 3 years. And that's what we would like to focus on as we move forward.
Amit, now once this acquisition is through, and I know that we should wait until Jan, so you give us better clarity and it gives you more time to sort of, deliver as expected. But does this sort of open up doors to give you the opportunity to cross-sell? You said that you wrote to a few of your clients and they've all wrote back with very strong positive responses. Will this give you a better opportunity to milk your clients' capabilities?
Look, so they work for 4 hyperscalers of the 5 hyperscalers. We work for 3 of them. Now, those 3 hyperscalers at least, A plus B, will become more than $25 million annualized run rate accounts for us immediately on integration. On closing, not integration, closing, right? So your client pyramid improves immediately. We've been largely working on the hardware, silicon design, embedded electronics work for these hyperscalers. They've been working largely on the software side. Together, it becomes a true A plus B as we take things forward. A. B, they've got 20 other Fortune 500 customers they're working for in fintech, in private equity and retail, which we don't have. And therefore, this becomes a big add-on for us. Third, we've got a very strong offering in the hardware, embedded software, VLSI design area, and we believe that these can be brought to bear in their customers fairly quickly. In fact, the team we have assembled, the transition team, is going to be led by a gentleman who spent years with us in LTTS based in California. He will be supported by about 5 different people working full-time on this. They've created the plans. In fact, I reviewed them yesterday with them to make sure that we are good to go. And we brought the part of the Intelliswift management team into this to show them what it was. So we have done that test drive, if I may. Look, this is the second big acquisition for us after Smart World. And we have talked, and with all the boundaries of secrecy and whatever is allowed, to be able to ensure that we are able to take it forward. We have talked to some of their customers that they had referred us to make sure that this aligns with the objectives of their customers as well. Finally, if the customers win, we win, and we believe technology, people, clients, all coming together, this will be a way forward for LTTS to charge up the growth.
Amit, congratulations, good luck. This is a big one in your kitty and it's not come cheap, $100 million. And like you said, there will be Lots that we would love to look forward to and hear from you on this as early as January. But for now, the street getting excited with this recent acquisition that you've announced.